On Point with Craig's Investment Partners.
The information provided here is general in nature and it's not financial advice. It doesn't take into account your situation, objectives, goals, or risk tolerance. All investments are subject to risks and none are guaranteed. Before you make any investment decisions, we recommend you contact an investment advisor. For more information about our services or to view the Craig's Investment Partners Financial Advice Provider Disclosure Statement, please visit our website, which is craigsip.com. Welcome to On Point. I'm Mark Lister, Investment Director at Craig's Investment Partners, and I'll be talking about a range of topics including economics, portfolio strategy, investor education, and anything else that's happening out there in financial markets. G'day team, hope you're all well. Let's talk about all of the key developments that we saw across markets last week, then let's turn our attention to what's coming up in the week ahead. Global share markets, it was a mixed bag last week. The S&P 500 in the US inched higher. It actually hit new records during the week and it finished up 0.3%. UK stocks were up 0.2%. Europe slipped marginally, while Japanese and emerging market equities posted more solid gains. Japan was up 1% and emerging market equities were up 1.4%. The Aussie market was a notable laggard. It fell back 1.1%, while here in New Zealand, the NZX 50 had its best week in 4 months. It was up 2.3%. So the index has risen 11.1% since the end of April, and it's now back in positive territory on a year-to-date basis. It was some of the smaller companies that drove the gains last week. KMD Brands, that's Kathmandu, up almost 15% for the week. Oceania Healthcare, up 11.1%. Tourism Holdings, up just shy of 10%. Amongst the bigger stocks, we saw Ryman Healthcare up 8%, Mainfreight up almost 8% too, and Infratil up 6.3%. So some very good performances there across the New Zealand market last week. US interest rates ended the week sharply lower. That was on the back of a disappointing jobs report. We'll get to that soon. And that saw expectations grow for a Federal Reserve rate cut later this month. So the US 10-year Treasury yield fell to 4.07%. That's down from 4.23% a week earlier. And it's the lowest that we've seen since early April, just after Liberation Day. Here in New Zealand, the 5-year swap rate was little moved. It finished the week at 3.34%. However, those US moves came in the Friday trading session and we were closed. So when we open on Monday morning, we might follow suit. Right, looking back at some of the key releases, and we'll cover New Zealand first because it was a fairly quiet week here in New Zealand. We did have a dairy auction and it was pretty disappointing. The headline index fell 4.3%. That's the biggest decline in more than a year. Whole milk powder down 5.3%. Skim milk powder also down. The only positive mover was cheddar cheese, which gained 3.6%. Markets were braced for a negative outcome. Fonterra did increase volumes for some products late last week, and that was probably a driver of the weaker prices. However, it was still a bigger fall than some expected. Internationally, there was a lot to talk about and a lot to watch. We had the ISM indices, the manufacturing index and the services index. ISM, of course, stands for Institute of Supply Management. The manufacturing index rose slightly in August. It rose to 48.7. Not as big a rise as some were hoping for, and it has been sub 50. 50 represents break even. It's been sub 50 for 6 consecutive months now, and it's been sub 50 for 32 out of the last 34 months. So the manufacturing sector, which isn't as big as it used to be in the US, has been struggling. More encouragingly, the new orders component was better than expected. That rose to a 7-month high, and the prices paid index, which is an inflation indicator, also declined. It fell to the lowest since February, so a bit of a mixed bag. The services ISM, which came 2 days later, the manufacturing one was out last Tuesday night, the services ISM was out Thursday night. That was much better than its manufacturing counterpart. So the services ISM rose to 52.0. That's the strongest in 6 months, better than expected. And new orders rose to 56, well above forecasts and the highest since October last year. So good news and bad news there. The key release in the US was the jobs report. This was for August. It was out on Friday night, so we got it on Saturday morning, New Zealand time. Our markets were obviously closed when this came out. weaker than expected. Just 22,000 new jobs were created in the month of August. That was below forecasts for 75,000, and the revisions to the previous months were a mixed bag as well. July was bumped up slightly, but June now shows a net loss of 13,000, and that's the first negative monthly print since the days of the pandemic in 2020. So we saw the headline unemployment rate increase as expected. It pushed up from 4.2 to 4.3. That's the highest in almost 4 years, and market expectations for a Federal Reserve rate cut at next week's meeting, I think it's Thursday the 18th, that morning is when the decision will come out New Zealand time. Markets now see that as a done deal. It's fully priced, and looking out to the middle of next year, so to the end of June 2026, markets see 123 basis points of easing, which is essentially 0.25% cuts. So one next week, then 4 more through to the middle of next year. So pretty punchy, to be honest. Looking to the week ahead, and it will be quite a busy week. Politics will be in focus. France will be in the spotlight early in the week with a confidence vote scheduled for Monday in the National Assembly. I won't dwell on that, but if you want to hear more and read more about why that's happening, what it means, and what you're seeing in French bond yields, which is quite an interesting space at the moment, you can read the written version of this report. Just log into our website if you're a client or talk to your advisor. There's a couple of interesting charts that I've put in about what's happening in France at the moment. But that confidence vote will be held on Monday in the National Assembly. Elsewhere on the political front, Japan's ruling Liberal Democratic Party might be holding a special leadership election to replace the Prime Minister. That could come on Monday as well. And in China, you've got the National People's Congress, the NPC, holding its session throughout this week. So lots going on the political front. In terms of economic releases, the key event will be the US CPI report for August, the Consumer Price Index, so inflation. This is out, I think, on Thursday, and we are expecting to see it push higher. We've already seen some evidence of tariff-induced higher prices come through in the US, and this is expected to continue. So the headline and the core CPI both forecast to increase 0.3% for the month, and on an annual basis, we're expecting to see that headline CPI increase at a rate of 2.9%. That would be the highest since January, and the annual core CPI inflation rate expected to be unchanged at 3.1%. So that's the key US release. We'll also get the University of Michigan survey on Friday, so Saturday New Zealand time, and that one will be interesting as well, inflation expectations and so forth. On the central banking front, the highlight will be the ECB, the European Central Bank, which meets on Thursday. It's widely expected to leave interest rates unchanged. So the ECB has cut its policy rate 8 times this cycle. It started at 4%. That was the highest that we've seen since the euro currency came into being, and it's now at 2%. So it's cut it from 4 all the way down to 2. Largely done cutting interest rates. There might be one more cut to come next year. Markets are unsure. They see a good chance of a cut, but not until maybe the middle of next year. So we'll just have to wait and see. Inflation in Europe has come down to where the ECB wants it to be. It's sitting at 2.1%. That's been the average of the last 6 months as well, and that is very close to the ECB target of 2%. So we'll have to wait and see how things play out. The central bank over there might be done though. If they're not done, then they're very close to being done. So expect an on-hold decision from the ECB on Thursday. Here in New Zealand, there's lots of little bits and pieces coming out. We've got the survey of manufacturing for the second quarter. That is out on Tuesday. ANZ's truckometer and migration figures due on Wednesday. On Friday, card spending, the manufacturing PMI, and a set of Real Estate Institute figures expected too, a housing market update for August. That one should be interesting. Last month's Real Estate Institute report reflected a still sluggish property market, but we did see some improving signs. Activity pushed a little bit higher. The days to sell was stable. although prices nationally slipped for the 7th month out of the last 8. So you're still not seeing really any recovery in prices, but there is a bit happening on the volumes front. And I think these next 2 or 3 months will be really interesting in the property market because we're moving into spring. It's the time when you do tend to see a little bit more activity. We've also seen mortgage rates come down a little bit more. So this will be a real test for whether we are going to see the market push on and improve as many have been expecting. So that could be out on Friday morning, I suspect, the REINZ figures. On the corporate front, not a lot to come. We are mostly done with the international reporting season and the local one. Oracle reporting a result on Tuesday and Adobe reporting a result on Thursday. In the US, here in New Zealand, the only one that's on my list is a half-year result from Briscoe Group, which is out on Wednesday. All right, team, that's all for today. Enjoy the rest of your weekend. Enjoy the coming week, and we'll talk again soon. Thanks for listening.
For more insights, visit craigsip.com.